Good morning, everyone. Welcome to the macro snapshot. Where what are we? Thursday, October the 16th, 2025. Recording this in the morning. Okay, so let's have a quick look. Not no data. The U.S. government obviously is still shut down. The betting markets are saying that that's going to last until November. So there's a lot of uncertainty about where the U.S. economy actually is. So markets tend to be moving around a lot on the headlines coming out of the China a sort of US kind of trade scrap. At this point, what we had yesterday, we had a fairly aggressive hawkish rhetoric coming out of Besant. He made a speech on, actually was on an interview and essentially trying to sort of raise the stakes and saying that China was being very unfair. So, at this point, Trump and President Xi of China are supposed to meet in, I think, Korea on the side of the APEC meetings in the end of October, so in a couple of weeks. So we might have some kind of bumpy sort of headlines over the next couple of weeks until and unless we get data, which will actually tell us what's going on with the employment situation and the overall economy. Now, talking of that, yesterday, what we did get was the Beige Book, which was released by the Federal Reserve. And as you know, that covers the different Federal Reserve districts, and it's like anecdotal evidence of the local conditions. And just reading through the summary of that, what I got from that, and what seems to be in the summary, is that the economy is stable and solid. It's not sort of really growing. There was sort of comments that unemployment, people are not really hiring, but they're not really firing that much. There is some concern over the sort of the trade uncertainty and the lack of clarity about tariffs, but overall demand is reasonable. So it indicates what we seem to be seeing is an economy which is solid enough. And that's all we can go on at the moment. Now, of course, there are going to be some companies doing better, other companies doing worse. There's a lot of talk about the so-called K-shaped economy, that only 10 or 15% of the US consumer actually sort of doing, 60 or 70% of the consumption. We'll have to see. Let's see how we go. But at this point, we got bank earnings yesterday, more bank earnings yesterday, combined with what we got on Tuesday. So the banks are doing very well. They're talking about a lot of merger and acquisition, a lot of IPOs. So at the sort of the top end of the sort of the real economy, life seems to be quite good. We'll see if the US consumer can maintain his and her strength. In the meantime, what we do see is that the SPY or the ES futures here, you can see they had a little bit of a wobble yesterday. A lot of this is on the trade, the trade arguments between the US and China. But as you can see, at the end of the day, we still seem to be just grinding a little bit higher here on NASDAQ, similar kind of situation. Although one thing I would note is that volatility has come down a little bit after the initial sort of Trump tweets on China. But as you can see here, it hasn't really got back to those pre-tweet levels of, let's call it 16.5, 17. We're still almost upper 20s. So that's implying over a percent move per day in the equity market. So volatility here is not as elevated as it has been and could be, let's say, up into the 22 and a half area. But definitely the market hasn't signaled just yet an all clear. And if we look at the MOVE index, you can see that has moved down. This is volatility for bonds. That has calmed down a little bit, but in the equity space, still a little bit of volatility. Now, if we actually go and let's just do a quick overview here of a few different markets. We could see over in Europe, we had LVMH. They had some quite good earnings. Let's just pick up the, where's that? Sorry, I just have to find my European Euro Stoxx 50. So you can see that that's also sort of pointing up. If we look at the Euro Stoxx 600, that's also slightly green. So nothing explosive, but there's a general sense that, the economy is okay. We had Lagarde and a few other ECB members on the wires yesterday, essentially saying that, they believe that inflation is more or less under control. The economy is relatively solid. No real need at this point for extra rate cuts. So we just seem to be puttering along in those two economies. Now, if we go and look a little bit more into Europe, let's just have a look at the French bonds. We just got news this morning that Le Cornu survived two no confidence motions in Parliament. So his sort of centrist government seems to be holding for the moment. But what's interesting there is that for the socialists not to vote against this centrist government, essentially what's happened is that the debt reform, so the fiscal spending reforms, the pension reforms, basically Le Cornu said, oh, that's too hard. Let's look at that in 2026. So it's interesting that the the French bonds are taking this as a sort of a mini celebration. You can see that there's been quite a lot of upward action in the last couple of days, just cooling off today. Also, we look over in Italy, we see this strength in the bonds and also in Germany. But going back to France, the point that they've actually put off any kind of fiscal reforms and pension reforms ultimately means that the chances of getting the deficit under control have been kicked down the road, and that's ultimately a bad thing. But of course, the market is a short-term 12-year-old boy, as I like to say. So at this point, this intelligent 12-year-old boy is simply saying, hey, that's a less political stress or uncertainty for the moment, so let's celebrate. Although we're starting to already see, compared to the other European bonds, the French bonds weaken a little bit. If we actually look at some of the currencies, let's just look at the euro. You can see here that in theory, there's sort of risk on. Well, the less risk, political risk in Europe should be good for the euro. And we've seen that the euro's had a little bit of a push, yesterday, not just sort of stabilizing today, because at this point, some of the hard economic data coming out of Europe has been a little bit soft over the last, over the last couple of weeks or so. And so, the euro is just finding it hard to push up because, again, the European economy is doing okay, but it's not clearly accelerating or doing well. So the euro just sort of stalling out here at this pretty key level here, about 116.85. Let's see what else happens. In terms of some of the other cross currencies, in Japan, we see that the US dollar actually, sort of went down a little bit against the yen, but now we're seeing the US dollar just coming back against the yen. And that could be because the incoming sort of leader of the LDP, Takeichi, she is in sort of negotiations to try and form a sort of a coalition government. And it looks as though she'll do that. And if that's the case, she is seen as being sort of a negative for the yen because of too much sort of a fiscal spending and then favoring accommodative policies. So possibly that's why the US dollar is just seeing a little bit of strength here. And if we just look overall, let's have a look at the Australian dollar. It's interesting in Australia last night, we did get the employment numbers. And actually, that was a slightly bit of bad news. It was up to 4.5%. Consensus and forecast was 4.3, and previous was 4.3. So unemployment rate heading up in Australia a little bit. So the question is, will that, give a sort of concern for the RBA? Will they cut in November? I think it's November the 4th is their meeting. And keep in mind that in Australia, about 18 basis points of cuts already priced in. So the market is, sort of 2/3, 66% thinking they will cut. And if that kind of weak employment data continues, that will be, a reason to cut. Having said that, in Australia, there is the all-important the next quarter's inflation report. That's coming up on the October the 29th. So just before the Fed meeting. And then the question is, that's still a little bit sticky. So that's probably giving the RBA a pause. But at the end of the day, for Australia, it's going to be the bigger picture apart from domestic economy sort of data is obviously what's happening with China and the US and the overall trade, because we know that the Australian dollar is a very powerful or the most important proxy for that. And as you guys can see here, the Aussie dollar, just on that China headline had fell and is now just sort of consolidating. Now it came off, as I say, on that sort of unemployment data we got last night, but has subsequently recovered a little bit. So probably just in a little bit of a holding pattern. In terms of other stuff, let's just have a look at gold. I'm not quite sure what to say about gold at this point. If we look at spot, well, there's the chart. I mean, it's definitely sort of parabolic. We all know the situation that, yes, there's central bank buying. Yes, there's this whole sort of narrative around debasement of the US currency and et cetera, et cetera, et cetera. But by any sort of regular sort of technical analysis, this is very, very overextended. In theory, this should at least pause and have a consolidation, maybe a retracement. But there it is. Not a lot to say here at this point. It seems as though there's huge retail demand. Are these people going to be left as the bag holders? Obviously, anyone who got in early, they're loving that. But much like silver, let's have a look at silver. This is on the futures. It's still a little bit choppier. It's a much smaller market, but gold and silver still up. And if you have the opportunity to play this with some options, maybe it's a pretty good shot for a short at some point, because it is definitely due a pause. Let's just have a look at copper as well. Copper not joining in the party. And that's interesting. You see here, this copper has absolutely not, especially with silver, which has about 55% industrial use. One would have expected copper to have performed a little bit better, but it's not. And that is just probably signaling, I don't know if there's anything technical here, but probably signaling still some nervousness about the situation between the US and China. And until and unless that situation with the rare earths, for example, is resolved, maybe copper is just going to be in a bit of a sideways grind at this point. A little bit like oil, if we look at the oil market here, a similar kind of situation. There was news overnight that Trump is saying that he's forced India not to buy any more Russian oil to try and punish Russia. We shall see. You see oil here. It's trying to make a bit of a jump here, but it's not really doing much, just grinding around in this trade zone. What we can see is that this Fibonacci sort of measured move, this extension is kind of done. So the main move in oil is done. In an ideal world, if you were shorted this, you're probably sort of exiting at this point or having pretty tight stop losses. But it just seems it's just ranging around. It's waiting for clarity about China and the US. It's waiting for clarity about the global economy and data. Remember, we don't have any data out of the US. So it's difficult for all of these commodities to sort of think that, to understand what's going on in terms of the US demand at a minimum. Okay, I'm going to leave it there, guys. Not a huge amount to say this morning. We don't have data. Ordinarily today, we would have had initial jobless claims and retail sales. We don't. So in the absence of that, the market is tending to trade much more on these sort of headlines and whatnot. But we'll just leave it there for today. And we'll see what if Trump comes out and says anything about China, and we also have some central bank speakers. So let's see what they have to say as well. Okay, thank you. We'll continue. Have a great day. We'll continue this tomorrow.